Hello and a warm welcome. You've joined us here on ET Now. I'm Ashesha Advaryu, and Reliance Industries numbers have just come in. On the face of it, clearly it looks like a good set. On the revenue front, we have seen a growth of about 5% on a sequential basis. 3,09,468 is where the revenue figure has come in for the quarter gone by versus expectations of about 2,98,000. So clearly, it's a beat when we compare it to our own poll. Now, as far as margins are concerned, they've come in at 15.4% in the quarter gone by versus 15% that the company had reported in the previous quarter. So on a sequential basis, margins too have expanded by a solid 40 basis points. So it's a good number even when we compare the margin figure. Now, profit figure has come in at about 20,950 crores. That too is a big beat versus expectations. We were working with about 19,100 odd crores, and this again is a 23% jump on a sequential basis. So across all parameters, whether it is revenue, whether it is EBITDA, it's a beat versus expectations. Only on the margin front, it's largely in line with what we were working with. But again, on a sequential basis, Reliance numbers clearly have been better than what we were working with. 5% growth on the top line front, 8% EBITDA growth is what the company has reported to come in at 47,520 crore, and the profit after tax figure has risen by 23% on a sequential basis. Meanwhile, let's also take a look at the segment-wise performance then, and that too has been solid this time around. Let's start with the oil to chemicals business then. And in any case, we were expecting strong set of numbers from here, but O2C EBITDA has risen by a solid 17% on a sequential basis. We were working with expectations of anywhere between 15 to 18% QOQ. So O2C EBITDA has been very strong this time around. Now remember, the marketing margins, the Singapore refining margins have risen this time around because of West Asia conflict, and that is precisely the reason oil to chemicals EBITDA has seen a solid jump up of about 17% on a sequential basis. Other than that, the oil and gas EBITDA has seen an increase of about 19% QOQ. Now remember, we were expecting a decline, so oil and gas segment performance has also been much better than what we were working with. As far as retail segment is concerned, over here we are seeing some bit of weakness where retail EBITDA has declined by 9% on a sequential basis. Retail revenue too has seen a decline of about 8% on a sequential basis versus expectations of about 2 to 3% decline. So retail is one segment where we are seeing some bit of weakness, at least as compared to our own expectations. And digital services revenue, meanwhile, has seen an increase of about 2% sequentially. So overall, when we look at the results, revenue has been much ahead of what the street was working with. Margins have come in at 15.4% this time around, an expansion of about 40 basis points on a sequential basis. And profitability too has seen a jump up this time around on a quarter-on-quarter basis. As far as segment-wise performance is concerned, O2C segment in line with what we were working with. Oil and gas has come in as an outperformer this time around. Retail has slowed down worse than what we were working with, and digital services revenue growth has come in at about 2% on a sequential basis. In fact, to decode these numbers, we are now joined by Mayuresh Joshi. Sudeep Bandyopadhyay is also with us on the phone line. Sudeep, evening, and thank you for taking your time out and joining us. Your first take on numbers and how Reliance has performed this time around.
Well, thank you for having me. I think oil to gas, that is a fantastic performance. We were all expecting that there will be slowdown, and as opposed to that, they have come up with a fantastic set of numbers. I still can't believe that, oil and gas will be so good. Of course, O2C is on expected lines. Singapore GRM has really moved up, and they were expected to clock in good numbers, and they have clocked in good numbers. Retail, bit of slowdown was expected because they are trying to expand the quick commerce business, and that consumes a lot of money, and obviously the margin will be under pressure was expected. But slowdown in retail top line was not expected. That is what I would say. As far as digital services are concerned, I think it's as per the expectations. So overall, I think predominantly on the back of oil to gas, O2G segment, I think I would rate this as fantastic set of numbers. Bit of niggling worry is on the retail, and I hope that picks up in the near future.
Oil and gas performance definitely has been better than what we were working with. In fact, ET Now poll suggested that oil and gas EBITDA could actually see a decline on a sequential basis, and that on the flip side has seen an increase of a solid 19% on a sequential basis. So oil and gas EBITDA has been very strong this time around, much better than what we were working with. Now remember, we were expecting a production to decline for the oil and gas business, especially on the back of KG63 block, and this time around that was largely the expectation, but the tide clearly has turned and oil and gas EBITDA has risen by about 19% on a sequential basis. I believe we also have Mayuresh Joshi with us. Mayuresh, if all right. Okay. Sushil Choksi, Director of Indus Equity Advisors, is also now joining us. Sushil, good evening. Your first thoughts on how the numbers look like?
I think it's a strong revenue number led by oil and gas and current crude prices, which are turning into refining margins. As per the commentary, what I hear, because I don't have the result in my hand, looks like oil and gas may be a little weak. Retail is a little flat to weak, and oil to chemical has done wonders for them. And the PAT is very visible, which seems very high from a perspective which you're looking at. So seems the market should get surprised from the positive side of results.
So numbers have been better than we were working with, and you're telling us that oil and gas segment has been very strong this time around.
Oil to chemical.
Oil to chemical business. I understand that. And what are your thoughts on the retail segment decline that we are seeing, whether on the revenue front or on the EBITDA front? Revenue has come in at 90,400 crores this time, a decline of about 8% on a sequential basis. There was no parameter to justify a decline in revenue for the retail segment, isn't it?
I think last quarter was 87,344, so 90,000 is like a 3 to 4% growth on top line. But I suppose the summer season might have impacted the retail trade, and that would have resulted into a little flat where margins are concerned. Excess heat would have not resulted into too many people venturing out, but seems okay. It's a seasonality impact. Possibly the festive season and expansion would catch up with the retail trade on going basis.
Okay, understood. Sudeep, let me come back to you. What kind of reaction do you expect on the market, on the stock of Reliance Industries when the market opens on Monday?
Well, I think it will be a positive reaction. In fact, even today, based on certain expectations on the O2C segment, market was giving thumbs up to Reliance. I think the oil to gas segment, fantastic performance will be cheered by the market. As I said earlier, the bit of worry is on the retail. I can understand the margin and the bottom line, but the top line revenue not faring well is a bit of a concern. Rest, I think, is absolutely fine.
Understood. So that's as far as your take is concerned. But let's also get in the ARPU figure, and we should have that in just a bit. But all eyes, of course, will be on any kind of commentary that comes in with respect to Reliance Jio, because that will be another trigger to watch out for. The Jio IPO, of course, all the regulatory procedures have already been put into place, and only the approval from regulators is now pending. Mr. Choksi, what will your view be on Jio IPO and the kind of impact that is likely to have on the stock going forward? I understand that at least as of now, we don't have any concrete commentary on the timeline of Jio IPO. But your thoughts on what that could have, what kind of impact could that have on the stock of Reliance Industries?
Jio IPO is a positive construct, except that the shareholders have to participate through the holding company Reliance. But the value which would emerge as what the market is estimating is a good positive thinking. But the ARPU, which is at 214, and Bharti is at 257, we need to see how Reliance is working out on plan with current consumer base expanding at the same time ARPU gaining traction towards 250 in the current financial year. I'm sure that the rates are likely to rise because India is the cheapest telecom play from that consumer play is concerned. And I don't see the new offering which is coming is likely to reduce debt and also support expansion. So the valuation based on what the market is going at 125, 130 billion should emerge a value creator for the telecom. And India, if you're looking in the current environment where global trade is concerned, India should be a comeback story and telecom should be one of the favorite sectors in that.
Understood. While we are talking about the telecom industry, we also have the ARPU figure, which has now come in, and the average revenue per user has come in at 215.6 versus 214 that the company had reported in the fourth quarter of FY26. So on a sequential basis and much in line with what we were working with, the ARPU figure has come in at 215.6, and this figure will definitely be very important ahead of Jio's IPO, and perhaps the street is also penciling in some kind of tariff hike for the telecom sector before and after Jio gets listed. In the meanwhile, we also have Mayuresh Joshi, who has now joined us. Mayuresh, your first thoughts on the earnings, and then we'll talk about the telecom business as well.
Very good evening. No, I think it's a steady state number. I think it was always expected to be a strong quarter for Reliance as far as the O2C business is concerned because of the spreads that had moved massively in the quarter gone by on all counts. And therefore, I think numbers are pretty much decent for Reliance. Telecom numbers and the ARPU numbers that you just mentioned also more or less in line with what the street was expecting to a large extent. But it will be interesting, at least on the telecom front, on two grounds. One, I think the IPO timeline, and secondly, some element of estimates that a lot of analysts are now starting to peg in terms of ARPU increases over the next 6 to 9 months as well, on an industry-wide scale. So I think that might actually top up the expected numbers and the effectively. So I think decent set of numbers that Reliance was posted.
It's a decent set of numbers on the top line front, and since we were talking about the telecom business, let's also talk about the ARPU figure. And as I mentioned, it has come in at 215.6 versus 214 in the previous quarter. Mr. Choksi, what will your thoughts be on the ARPU figure? And customer base is also in line with expectations, risen to about 533 million versus 524 million. So that's about 10 million or 9.5 million increase on a sequential basis in the net customer additions in the quarter gone by. Your thoughts on these two parameters for the Jio business?
0.7% increase on ARPU on month, quarter on quarter would lead to a 3% increase on an annualized basis. The street would be working if they can get to a constructive number between 5 to 10% increase rather than getting this mild below 1% kind of increase, because the usage is increasing. The base monthly subscriber data is known to all of us because it's that published by TRI. I personally feel that time has come where ARPU increase may come after the listing, when the listing happens, and possibly we should see 235, 240 within a year's time rather than just working on a number of 214.6 and 216 right now and going to 220 by the year end. I'm quite sure that 10% growth on the ARPU number should be visible in 12 to 18 months.
Okay, so 235 to 240, that could be the ARPU figure be over the next 2 to 3 years. That's the word coming in. And yes, it has been in that range of 210 to 216 over the last several quarters. But Mayuresh, let me come back to you and your concluding thoughts on how the stock could react and how the segment-wise performance has been this time for Reliance.
So as I mentioned, I think O2C is reasonably very strong. Telecom is steady state. Retail has been a steady state performance as well. And therefore, I think the retail-focused businesses should continue doing well for Reliance over the next few quarters. And earnings should be far more consistent as we speak. When it comes to the oil and gas business, obviously, I think it will be dependent on what happens on the macro scale, both in terms of the refining margin thereof and how the movement probably is in terms of crude. For O2C, in general, I think, again, dependent largely in terms of how the spreads will move out, whether it's gasoline spreads, petrol spreads, or the ATF spreads, which have remained in favor so far. But even if it is normalized, that to a large extent, it should be reasonably placed, looking at the stock options that Reliance probably possesses, giving it the edge in terms of reporting better margins. Last but not least, I think the new energy verticals and then the progress and the commissioning thereof will also probably lead to some element of increasing as far as the overall equity is concerned. Credit control, return ratio, specifically ROE is steady state as well. The stock actually performed well in today's day. I have no reason to work out that there will be a positive reaction on the stock on Monday.
Right, we get that. Mr. Chokshi, let me come back to you, and I believe you wanted to make a point. Your concluding thoughts on how the earnings were?
Ma'am, visualize a company which is at 18 lakh crore market cap today, working with a Jio IPO. Current year annualized EBITDA should be 2,25,000 crores. So you are roughly getting at less than 8 times on the EBITDA. Keeping telecom and retail play, already the comparative companies are trading at a much higher EV to EBITDA. New energy business, which is already commencing production, and I understand cell to wafer to cell also is commencing. Battery division is working. The new energy division would further energize the company, and hydrogen production, let's estimate it may start in fourth quarter or the third quarter. We cannot imagine today, but if all the new energy business adds to the company and oil to chemical is doing well. Second thing, keep in mind, Reliance assets are built at 40 to 60 rupees to a dollar. Today, dollar is at 96. The replacement value of the entire assets of Reliance, if you want to replicate for a competitor, should be competitive against Reliance is little difficult. Keeping in mind a sustainable return, and the stock in 12 months can be trading near the peak. That is what my result synopsis says. So I would say, and India needs a trigger compared to the AI trade which is happening in the world.
Right.
So Reliance result along with the bank result tomorrow may stabilize the market for a positivity in the coming quarter.
That's a very, very positive note, Mr. Choksi, Mr. Bandyopadhyay. And Mayuresh, thank you for taking your time out and joining us here on ET Now and sharing your thoughts on how Reliance Industries numbers have been. And clearly, it's a beat across all parameters, and perhaps we'll see some bit of positive reaction on the markets along with banking results that will be reported tomorrow. But that's all the time we have on this edition. Thanks so much for tuning in.